Investors are going to be keeping a close eye on the minutes from the Fed's latest meeting, which ended on the first month of this month. Those minutes are due out at 2 p.m. Eastern time today. Steve Liesman joins us right now with more. And Steve, all kinds of buzz that are coming out right now about some comments from Bullard earlier today, too.
Yeah, exactly. Interesting stuff. Let me put those in context. Well, two things stand out from Fed Chairman Powell's press conference after that meeting. First, it was the one where he labeled the decline in inflation transitory. Second, he said risks like trade and global weakness were moderating somewhat. So some economists have pushed back on that first item, asking just how transient the inflation decline is. They argue that every month, it seems, some category ends up tamping down prices, making the overall decline in inflation persistent, not transitory. So these minutes are going to be read for clues to how much other committee members agree with Powell and think the Fed ought to take out an insurance policy against low inflation. I don't hear consensus for that in public speeches, but maybe they think differently behind closed doors. We'll get a feel for that in the minutes. But as Becky said, St. Louis Fed President Jim Bullard said on Wednesday that reducing rates could help maintain the credibility of the Fed's 2% inflation target, which you saw from the last screen they're not hitting. The other issue on the table is trade, which looked like it was headed for like a resolution around the time of that last meeting, prompting Powell to say that the cross currents were abating then. We know what happened since the meeting. New tariffs have driven up market estimates for a rate cut this year to near certainty. 70% on, there it is, 70% on December, 79% for January. Unfortunately, minutes may not provide significant commentary on this since the new tariffs were put in place after the meeting. The question remains, will Fed officials treat tariffs as inflationary because they could drive up prices, or deflationary because they could drive down growth? Guys, so I talked to Raphael Bostic on Monday in Jacksonville. He said he's not ready to move. Thinks the markets maybe overpriced that cut. And Rosengren yesterday was very clear from Boston, saying that he's in a wait-and-see, not moving either way mode. Back to you.
Bostic's not a voting member this time around, is he? But,
no,
but
Eric Rosengren is, yeah.
Rosengren is. And Bullard, is he a voting member? I'm sorry to throw this stuff on you. I'm just trying to think through it.
You know, I don't know. I don't think he is, but maybe he is. I didn't look that up.
They just told me in his ear. I don't know this, but they just told me in his ear that, yes, he is. So I'll take their word for it.
Okay.
Steve, we were talking with Mike Santoli earlier today, and we were talking about those Fed fund futures where you do see them factoring in a rate hike later in the year. His point was they're not always predictive because it's a long way out and the market can change its mind pretty quickly.
Right. And we've talked a lot about this, and this is something that Rick Santelli has been very good about, sort of warning about it. It's like anything else that predicts the future. The further out it goes, the less certain it is, and the less the lower its accuracy in terms of predicting. As we get near to a meeting, if you could put up that chart again, that's the one where you really want to focus on it. Sometimes they're just taking out options against other sort of positions they may have in place. That said, Becky, when you see a 70% certainty of something happening in December, you have to take notice. It tells you that a lot of folks are on that same side of the trade. Usually we wouldn't make a big deal of these things being out there. 52% in October, and you know what? September is not that far away. So we really want to be careful and watch this. And the reason you watch it, Becky, is because when you listen to the Fed folks talk, are they leaning against or with or neutral to the market stance? Bostic was the first one on Monday to really say the market has this wrong, and I'm waiting to hear that from other speeches that are out there to see if the Fed is comfortable where the market is priced when it comes to the outlook for Fed funds.